I know. It is the truth. Welcome everybody back. We are live. Hopefully we're in the right place. I'm hoping and I'm praying. Riverside, please fix. But yeah, no, I think it's a different one for sure. Yeah, I think it's a different one for sure.
I will just share the Market Buzz link. I mean the page.
Maybe, maybe not at this point. I'm super confused.
Let me check. I will click on the link, see where it leads me to.
Yeah, I think it's gonna be a different one for sure.
Are we supposed to be live now?
Yeah, we're live now.
We are live.
Oh, okay.
We're
We
live.
are
Then the link.
live. Technical
Yeah.
difficulties as every single other time. It's not a market bust episode without some distortion. You know.
I will just
Boom.
share the link right now.
All right, all right, all right. Ladies and gentlemen, welcome to another episode of Market Buzz. Whew. Today's episode is going to be a tricky one, eh? Oh.
One sec, because we have only one viewer.
That's Mimi.
She left the computer on.
I just need to find the link now. The YouTube
Here, I'll
link.
share it. I'll share it. Man, yeah. Share, copy. It's on the Market Buzz. There you go, guys. Yeah, it keeps happening. Every single time I make it, it's like every single time it just gives me an error.
Yeah, it's without the picture then, right? And
Correct.
the title and stuff.
Yeah, it just says Market Buzz, right? I could actually OBS it too, though.
But we are live now, so it's okay.
Yeah, we
can start.
It's the truth. Welcome to another episode of Market Buzz, everybody. Sorry for the delay. Sorry for the delay. We're still trying to figure this streaming thing out. But at least markets are green, so, you know, we can have all the technical difficulties we want as long as the market continues to rally.
Oh, yeah.
You know? Hello, Mimi. How you doing? Oh, man. Yeah, this week in markets has been a crazy one. So I'm sure everybody's been trying to pay attention here, but it's been super juicy. In today's episode, we're going to touch on a couple of points. We're going to talk about earnings, we're going to talk about tariffs, and we're going to try to decipher what's coming next. Amazon and Apple in the docket. Super interesting what's going to happen. You know, I think Amazon and Apple out of the Mag 7 are the ones that are likely to be most affected from the tariff after Tesla. So, welcome to another episode of Bam, 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 bam. Market Boss, baby. Oh, man. Yeah, it's been insane. It's been insane, you know? Microsoft yesterday, you were really happy, Timothy, eh?
I'm very happy. Microsoft and Meta are one of the biggest holdings in my portfolio. The ones that I bought also during the April dip. And yeah, Google as well. Earnings are going fine. Actually, I saw the statistics, and it's the fourth quarter already that earnings and profit margins are up over 12%. So where's the recession?
Yeah.
That's the question.
It keeps coming. You know, it's next quarter. Like it's yeah. You ask the Bears, and it's always on the next quarter. But you ask them the next quarter, and they say, "Oh no, it's the next quarter." You know, it's the next quarter. So it's been super interesting, the results. By the way, Akeem, you're muted because you're making way too much noise. So make sure to mute yourself when you're speaking.
Yeah, I mean, the earnings, they show that the fears were overdone. I mean, the fears that we have this year from end of the world, no more global trade, no more economy. So I think this shows that the fears were a little bit excessive, and the markets recovered very well. I personally don't think that we will return to the double bottom we had. It looks like a V recovery. There might be a small correction or profit taking in the next days or maybe next week. It's always hard to time, so I don't try timing that. Weak guidance from Apple or from Amazon tonight could cause already profit taking tomorrow, right? Powell, I believe, he's speaking as well tomorrow. So
We have unemployment
Powell's,
data tomorrow too. Unemployment and
we have
non-farm
an
payrolls as well.
we have unemployment data. We had some labor data coming out today, showing initial job claims keep rising, and the continued job claims, they steady but very high, meaning people cannot find jobs actually. So I mean, the ones who are already unemployed, they cannot return to the workforce, which shows that the labor market is weak. The GDP, we had negative GDP this year, this week for the first quarter, showing the economy is potentially weakening. Yes, there's the impact from imports, but combined with the labor market, there's some weakness there. Inflation keeps going down, so it looks like the Fed will cut rates.
Well, we still don't know. We still don't know. They are leaning towards the inflation data. And by the way, Emmanuel, welcome to the stream. Just to let you know. So the thing is just like, I think you said something that's very interesting, but I disagree with it a little bit, which is the fears are overblown. The thing is just like everybody sort of thinks that all of the issues come right away, when the reality is like there is lagging effects for all of the things that are happening right now. So I think that right now I'm still cautious. You know what I mean? I'm very bullish, but I'm still cautious on what can happen next. Microsoft is going to be having earnings, which is great. Apple and Amazon are going to be having earnings, but like you said, this could create some negative fears in the near future in the TQs. Repeat, Akim, because yes.
Did you mute me? I said technically fears are always negative. You said it could bring negative fears. I read the research, a very interesting one. Can you guys hear me, or are you still muting me?
Now we're good. Now you're good. You're good.
I read a really interesting research. It's a psychology research. It has nothing to do with the stock market. But Mimi is watching, and I know she always likes these psychology references. There's a research that basically says that people worry. So 100% of their worries, right? You take them. 85% never happen. 85%. Never happened. And the 15 that happened, they're actually not as bad as they expected. So this is about life in general. And in the markets, it's the same thing. You have like a list of worries, a long list of worries. But when you look at the facts, earnings are good. Guidance overall is kind of vague from most companies. But what kind of guidance can you give? It changes every week. The tariffs, the regulations. So it's very difficult to give guidance. And that could actually be a boost in the next earnings season because the guidance is weak or vague. And if the next earnings season is good, I mean, this is another set of worries that just disappears.
Agreed. That's the thing. It's like every single time we're expecting the worst, right? Like I think the news cycle is talking about we're gonna get empty shelves and we're going to the fear uncertainty, and I don't think that's gonna happen. Like I'm sorry, we didn't even get empty shelves during COVID. You know what I mean? So it's like this is okay. Like the data for 2023, and this could change. Like maybe it's a little bit higher, but it's about 14% of Chinese imports coming into America. So 14% of products are affected by the tariffs. But I just think we get a reshuffling in here, right? It's a reshuffling of trade, right? Like Apple, for example, is going to start producing iPhones in India. The iPhones in India are just going to go to America. The Chinese are going to go to the rest of the world. Yeah. Right? It's a reshuffling of demand. Like we're seeing some movements that can create some problems down the line, but we're not going to see major issues drop and everybody start panicking and freaking out and we need to now hoard again toilet paper.
Yeah. Now, look, you have a lot of Chinese companies that already set up facilities, logistics facilities in Mexico. So technically, those products are not imported from China. So that's like, it's very easy to avoid those tariffs. It's very easy to avoid those tariffs for the 14% of products that you say that come from China. It's very easy. They can put in a facility in another country and then just export. They can even put a facility in India and export. As you mentioned, Apple, that's what Apple is planning to do. I think the supply chains that are in China, they will stay in China. It just, India, the Indian facilities will be basically middlemen.
Yeah.
And yeah.
No, it's the truth, and like regulation is still very slow to adapt, right? So it's like the product of the product of the place of origin laws have to change in order to address those things, and that takes time. You know what I mean? Like there's gonna be just a reshuffling for now. I don't like. I think we're gonna see some price increases, but I don't think we're gonna go as high as people are thinking. Yeah, we had some inflation data this week that was kind of ugly, right? And then the market freaked out with GDP data and the
It
inflation
wasn't
data.
ugly. The
It was
inflation
it
data
was
wasn't ugly.
it was a
No,
little bit higher than expected.
it showed a decline. The
No,
PCE.
Core PCE was 2.6 and it was estimated 2.6 year on year. I have it
so it
here
came in line.
on a chart.
And the
Then
monthly.
the
It was zero.
PCE was 0. Estimated was 0. Core
Yeah.
PCE was 0. Estimated was 0.1. So
So it wasn't
Zero.
bad. It wasn't bad,
Zero.
but
Zero
it's
is
good.
like, it's below the Fed target. The Fed aims 0.2
Yeah.
approximately, right? So
Yeah, so it's
it's
under.
good.
But then the
Yeah.
GDP data, it was expected that the GDP data was going to come in worse than expected because imports were all of a sudden rose.
Yeah.
And then the market reacted in such a weird way. It was a buying opportunity for sure. It felt like a buying opportunity because we were there seemed to be a lot of de-risking into the earnings.
Yeah. This uncertainty also, what it can cause consumer spending to be delayed. So, like me, if I was in the US and an Apple would be tariffed 145%, so an Apple product would be, let's say, twice more expensive. I'm just not going to buy it now. I will wait
Until they come
and
down.
I'll buy it later because I know they will come down. And I think this is the effect we're going to see actually this
Yeah,
month.
well, we still have exemptions in Apple products, right? The question
Yeah,
is we
it
still
was a bad
don't know.
example.
But I know, but you know what I mean? It's like, so, and at the end of the day, right? Like, I don't know. I see other companies stepping up and then just being like, okay, like now we can sell to the Americans because the Chinese are out of the market. Now we are competitive, or even the American companies producing. So I don't see the crazy fear that everybody's seeing in the markets. Timothy, what do you think? What do you think about the tariffs here?
no, I want to read something. So here is the news from 2 days ago. 1. Critical economic report Wednesday to show how close the US recession is to come. 2. Trump's trade war update. High chance of a recession by June. Then think ahead saying how to spot a recession. So every eye is going on a recession. And let me tell you something. When the news is talking about a recession, when everyone is talking about a recession, do you think the recession will come? Because never ever has a recession happened when everyone was expecting it.
That's the thing. You know what I mean? Everybody's calling for it.
Everyone is
Yeah.
preparing for it since 2022. Since 2022, everyone is expecting a recession because the yield curve inversion, because also sort of charts, and eventually a black swan event. Nobody can predict it. You need something to collapse, and right now it's not happening. So in terms of should you maybe hold on buying stocks during dips, I don't know. What I'm doing, I'm buying stocks when there's a dip, and I will continue buy stocks when there's a dip. Always leave some cash in case the market goes lower, but I'm not gonna hold off or sell stocks based on what the news is trying to tell you or how they are going to predict the economy. economy. If
Mhm.
an economist is not able to predict a recession, how are we going to predict one? So
Yeah.
it's like a waste of time to trying to base your investment decisions on how the economy is going to turn.
Mhm. There was a question, right? Nestor, you
There's a
put it on the
question here.
screen.
Yeah, we can address it here if you want. Guys, here I put it here for a little bit. Would it be nice and interesting if you could tell us your opinion between stocks and high dividend yields, with high dividend yields and low performance like BMW, Volkswagen, and low dividend but high percentage performance. So I'm guessing growth
Yeah.
versus yield is the question here.
Yeah.
Um, should I take this one? Or
Take it. Take it.
I'll
Financial
take it.
financial advice here. Okay, this is
I'll
not
take
financial
it.
advice. Make sure don't forget to hit that like and subscribe. If you like the content, don't forget to leave a comment.
I'll take
We
it.
enjoy that you leave comments.
Yeah.
So thank you so much, guys.
Look, there's no easy answer to this. Otherwise, if there was an easy answer, all the investors in the world, they would go for one of those two categories,
Yeah.
right? So if both categories exist, it's because both bring some kind of value, and it depends like on the portfolio you have. Overall, what brings the highest returns are growth stocks. So Microsoft is huge. It's not considered growth stock, but it has growth, double-digit growth. And in terms of appreciation, I mean, it brought returns since now 2 decades, quite steady returns. So I think Microsoft is kind of a must in any portfolio, whether growth or conservative. We saw actually the strength of Microsoft. It's really astonishing. The whole tech sector was down. Microsoft quite strong even before the earning report from yesterday. So that's one of the assets that didn't drop that much actually. And year to date, I suspect this is even I don't know. I mean, I think it's not down that much. Microsoft year to date. Let me check it quickly. Actually, it's up 3%. Microsoft year to date. It's gonna be hard to find a tech stock that is up year to date. And regarding the dividend stocks, if you want to receive dividends that will be reinvested, you have to look at players that have been paying dividends since 10 years, 20 years, in my opinion. You shouldn't go with some that are weak, that risk cutting the dividend. Because if you go with companies that have weak performance for their dividend, and then they slash their dividend,
And they
you're
take
left
even
with
more.
junk.
Yeah. I have a problem. I have a problem with dividends, and it's because I live in a country that charges you tax. The problem that I have with the dividends is it's charged as income. So if you're a high income earner, you're paying 40 to 50% taxes on top of that, and then the Americans take a little bit too. I don't like that. I don't like that. So I like companies that are innovating, that are creating change, and that are changing the way we look at the world and that we approach society. Companies like, I'm going to talk about it later. I want to talk about it now. But companies that are creating and making that changes, and they're reinvesting because they know what to do with that money better than myself, right? And it's almost like you want the value of the bond to grow in a sense, right? I don't want the yield. I want the value of the bond to grow, and I want to continue see them because it's like I'm giving you my cash. I want you to use the cash to the best of your ability. At least my opinion. But I agree that yielding positions have a place in a very well diversified portfolio,
I think
depending on what
Timothy
you're looking to do.
Timothy wants
Timothy,
to add something, but then I would like to add also, very quick.
I would like to subtract. I would like to subtract.
Okay, first of all, Nestor, you're correct. In Belgium, it's the same. 30% is taxed on dividends, so that's why I will not really focus on dividend stocks. Second of all, you have dividend stocks that are growing as well, like outperforming the market.
Yeah,
Those are like G&G, for example, Johnson and
it's
Johnson. I'm not
it's
sure
those you
right
need to go
now.
with.
Yeah, you can buy dividend stocks that can outperform the market with some juicy dividends. So you don't really have to go for Volkswagen. The car industry is relatively cyclical, so I prefer not to invest in those. And I also want to ask like, what's your age? Are you 20 years old? I would go 100% into growth, not financial advice. But I mean, what are you going to do with those dividends? Reinvest them in a slow growing stocks? No, if you have growth stocks in your portfolio that compound every 3 to 4 years, they can double, then you're growing your net worth much faster than investing each month into dividends with a small yield. That's my opinion.
Okay, Keen,
Yeah.
go.
And one last thing about this. Actually, you should look for companies that do share buybacks, because share buybacks are a form of dividend yield. You
Dividend,
have to look at
yeah.
the share buyback yield. It's companies, they buy their shares back and it push the price up of stocks. And it actually boosts the earnings per share because you
Yeah.
have less shares available.
And there is
So
no
look for, and
taxes.
it's not taxed. Exactly.
Yeah, you know what I mean. I 100% agree. I like the share buyback. And they want to. I think Biden wanted to tax the share buybacks too. They were talking about it at some point. I'm like, bro, like it's okay. We just want to buy the shares. Like if they buy the shares, my shares go up. I decide when I make the sell.
Yeah.
The thing is like dividends, and depending on the portfolio, it has its place. It has its place, but it depends on the portfolio. But people that say only dividend, cash flow, no, because you're reinvesting, you're growing, you're innovating, you're creating value in different ways, and I like that. You know what I mean? I like that. But okay, now we're gonna talk a little bit about their earnings previews of the companies that we see. So we saw. Well, first let's talk about the earnings of
It was a great
Microsoft and
question,
Meta.
by the way. Just to mention, it
Great
was a great
question.
question.
Great
Really.
question. Make sure you keep them common. Make sure you keep them common. I think he said another thing. Somebody said, I think sustainable dividend programs attract demand for stocks, which helps with price appreciation. True. And then the BNP Paribas, huge dividend. They just announced a big share buyback. Not
Actually,
financial advice.
it's it's a really great point. Kayo just wrote. The dividend yield also acts as a floor for dividend stocks. So dividend stocks not going to go to zero. It's just going to go down to, let's say, 10% dividend yield. If it reached 10% dividend yield, like the whole market is buying it, and so it acts kind of like a
it
floor,
acts
also.
like a bond,
a safety floor.
Right?
Yeah, absolutely.
Okay, that's interesting. That's very, very interesting. Because at some point, like borrowing money like letting Apple borrow money during COVID was more safe than the American government because they were paying a lesser yield on their debt, I think.
Yeah, I mean, Microsoft is AAA, right? While the
Yeah.
US Treasuries, I think it's just a double A. But Toby also added something, right? By the way, congratulations on passing the certification. Orbital.
Ooh.
Orbital just added a comment.
Where?
You had it on screen. You literally just had it.
The BNP Paribas?
Yeah, I think so.
All right, this one?
Oh, yeah. Mm-hmm.
Okay. But yeah,
know,
so it's like, I don't know. I see it more in like, I don't know, like dividends, like at that point, go buy bonds from the company too. You know what I mean? That also you can make a little bit of money. But okay, so Microsoft and Meta had earnings yesterday, and this is the big canary in the coal mine. Everybody was expecting capex to be reduced because of the recession, and everybody was stop spending. Nobody wants to spend any more money because the world is over, and we're gonna have empty shelves. And all of a sudden, Microsoft and Meta both increased their capital expenditure expectations for 2025. Boom. It's mic drop. Nvidia rallies, which is my favorite stock. Boom.
No.
You know what I mean? Everybody be talking and everybody be, I know what's happening, and nobody knows. Nobody knows. Nobody knows. And then Microsoft and Meta had amazing earnings. And I want to hear what you guys think Apple and Amazon are going to do today. I want to hear Timothy's view on Amazon.
What outlook? No.
What's your expectations? What are you looking at? What are you expecting?
The thing is, Amazon, Google, Microsoft, Meta, they are all so resilient during bad economic times. So for me, those are the stocks I always want to have in my portfolio. And they can even have a quarter or two bad earnings. I mean, that's okay. They can, you know, in 2022, they can miss some, and then the share price drops. Everyone is selling the stock, and eventually you'll see they recover, because what happens? Everyone is having a tough time, and Amazon, Google, Meta, the big moat companies, they are buying out the other companies. They are buying the ones that are going broke, and they are only making their moat stronger, and they are coming back harder. And that's what you have with these companies in the long run. They are resilient time after time. Go look at Microsoft earnings in 2020 when there was a recession, and 2022 when things are so bad. They kept making more earnings year after year, even when things were going down. More profits, more sales every single time. That doesn't mean they can't miss a quarter in earnings. So do I predict Amazon will beat the earnings expectations? It's hard to say, because like you said, Nestor, Amazon is the one most affected. Apple is the one most affected as well. So it's hard to say what it's gonna do. My aim is to look in the long term. Okay, is it gonna stay resilient? For me, it's a simple yes. So I will continue to buy when it comes undervalued. When the price dips, I will buy even more. When it dips even more, I will continue buying, and that's what makes me happy. I'm happy when the market goes down. I said it two podcasts ago. I was happy when market drops. So I will continue to do the same strategy and stick to it like I've always done.
Okay. Akeem, tell me, what do you see? Are you shorting gold?
Uh,
You know what made me bullish? Like last week Monday I turned bullish. Like I was like in the
bullish
bullish
on what? On stocks or on gold?
on stocks, on stocks. Because every single person I was talking about stocks, they were like, no, 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 we gotta go into safety. And I was like, bro, it would have been great to go into safety when we're at the peak. You know what I mean? All-time highs at the
Exactly.
S&P 500. Talk to me about. I told everybody, I was like, talk to me about defensive stocks next time we go to all-time highs. Right now, what are we doing? Like now, I'm getting
No, absolutely.
amazing prices on tech. It's like so right now. But the thing is,
Absolutely.
it's like the question is like, are we done? Is the gold trade over? The question is like, usually when everybody thinks is the thing. I don't like shorting particularly, right? Because Mimi, I feel bad because Mimi talked about the short of the Apple short, and I was
Yeah,
like,
you kind of forced her to short Apple.
no, no.
Apparently.
Man, I told her not to. I was like, no. Like the thing is,
Yeah.
I
I
hate Apple.
actually understood that you actually were recommending to
No,
short.
like
That's how
I
I
can
understood it
see the
also.
short. I can see the short, but
Yeah.
the
This
fan base,
means this means something.
the fan base of Apple is like there's a cult. Okay, when you
Yeah.
touch an Apple product, you become a what's the name of the founder?
Steve Jobs
Steve
or
Jobs.
the other one?
Steve
Yeah, yeah,
Jobs.
yeah. Steve Jobs. You become Steve Jobs. Like he channels through you, and then you become part of the collective. So that's why I don't like Apple. I love the stock. The stock is fantastic. I don't like Apple products, but the thing is, just like even when the stock is meant to go down, it goes up. It's safety
Yeah.
when the tariffs are attacking the products directly. It was the only stock that was going up after the tariffs went up, and it was like, bro, like they're getting tariffed 145%. Like they're not gonna sell more iPhones. This is gonna end, and they still go up. So it's such a hard short to do. It's it's like shorting Tesla. It's like Tesla's
It's
supposed to
hard.
go down, but
Yeah.
then all of a sudden you get a fanboy base rush, and then all of a sudden they cap you out. You lose like half your gains for the year.
Yeah.
Not,
It is. It is.
you
It
know.
is. I mean, I would not, stock short Apple for the reasons you mentioned. So I'm not going to repeat. And for gold, gold is very hard to short as well. Gold. When does it go down? When there's like absolutely no uncertainty, and there's no flight to safety. There's no flight to store value. Can you say that about the current macro environment? Can you say you cannot say it during the whole mandate of Trump? Maybe during Biden's mandate, you could have said, because
What have I done? Not financial advice. Not financial advice. Sign here, here, here.
yeah. I mean, I'm not a shareholder in Apple, and I wouldn't buy Apple. And I wouldn't buy Apple. And I think the earnings may not even be really good tonight, but the stock would still go up if the guidance is good. And a good guidance would be, okay, we secured facilities in India from where we can ship to the US or where we can assemble in India, right? So if we have a plan, a tangible plan mentioned tonight, the Apple will rise even if they miss revenue and earnings. The fan base is just so strong that any single good news is sufficient for the stock to rally. We saw it with Tesla.
Yeah.
They miss every earnings report. They miss everything, revenue, earnings. The valuation is like 100 times PE, but the stock continues to rally from time to time, plus 10%, plus 20%, just on some random news, So
yeah, just the fact that Elon Musk was going to step back away from Doge and potentially come back to Tesla, and then boom, boom. It's like, oh my God, Elon back, baby. Ape to the moon. I want my rocket. You know what I mean? It's like, great, fantastic. I can't trade. You know what I mean? Like, I own Tesla. I think, do you own Tesla, Kim?
No, I don't. I never
I
did.
own it. I own
My
it.
wife does. My wife does.
I've gone up, and she's going to be buying Louis Vuitton with that Tesla stock. Oh, yeah. But yeah, it is the way. You know what I mean? And then it's like, I don't know. The thing is I want Elon to succeed. Elon wants to go back to his home planet. He wants to go back, and I think he will. But it's the beauty. It's the beauty. But that's the thing.
Apple.
But
yeah, one more thing about Apple. Like, okay, they sell a lot of hardware, but they also now sell a lot of cloud services. There is Apple Stream, so there's this whole ecosystem.
It's a whole ecosystem
that keeps the customer buying their products and spending on other stuff than only what's being tariffed now. So you could say in the long run, maybe it's not that affected.
You're talking about Amazon or Apple?
Apple. You're not listening, Nestor.
Funny enough, Amazon has the same thing, because Amazon has AWS, which is not going to be tariffed. They have so many other products and services, Prime, blah, blah, blah.
Yeah.
Maybe they actually benefit. There is a theory that Amazon benefits from the tariffs because they can charge more to the people selling on Amazon, because the prices just went up and they make a percentage.
Yeah. How are you going to tariff cloud services? How are you going to tariff emails, right? Also, this for Microsoft Outlook. And what we saw yesterday from the double earnings report from Meta and Microsoft, essentially what they said is there's a lot of gold left in the AI mine, a huge amount of gold left there to be mined. And that's why you had Nvidia going up. There was no earnings report from Nvidia, but Nvidia was going up because they sell the shovels to the mine. And they're saying there's a huge amount of gold left in AI, and AI, I think, will transform and has already transformed a lot in real life, and it will continue to drive earnings in the future. So the key is to buy on weakness, to buy when there are bad news. Just like Timothy was saying earlier, you have to buy when the stock is down. When it's down for not really fundamental reasons, when it's down just because the mood is bad, right? When the sentiment is poor, then you buy.
Yeah. Well, this is interesting, Orbital. Because he says only a small percentage of Western stocks are undervalued. But interestingly enough, we talked about dividend yields and growth, right? And sometimes the PE ratios of, for example, Microsoft, Nvidia are sitting 30 plus, but it's because of the growth. Right? So it's usually like whenever we saw the deep, like I think the future PE for Nvidia reached 17, and I'm expecting Nvidia to grow 100% year on year for the next couple of years. Nuts. It's nuts.
Yeah,
So
and
yeah,
1 month ago, when all the tech stocks dropped 40%, I mean, those were at prices not seen
Yeah.
in 3 years. So these stocks were definitely undervalued. You didn't
yeah.
have to calculate it. You could just press the buy button and knew for certain that it would go up in the long run.
The question, I think, here would be to put the question mark on the word undervalued. Like, how do you define undervalued? Because for undervalued, I mean, to do a valuation of a stock, usually you compare with other stocks in the same sector or with the same stock but historical values. And Microsoft has been trading for a long time now, over 25 or around 25, 30 PE. So it's in line with the historical average. It's in line or even cheaper, in relation to other tech stocks and other Mag 7 stocks. So I don't feel like they're overvalued now, when you compare to similar
Well,
stocks and to historical average.
well, look at Nvidia. Nvidia touched 160. Let's talk about the Nvidia story for a second. Nvidia touches 160, but we've gotten a year of earnings and a year of actual like almost like better than perfect execution. You know, It- it's been flawless. You know what I mean? Like almost flawless, almost flawless, almost perfect. And we've gotten a year of earnings growth, a year of new stuff, and then the company comes down in value because yeah, it was sitting at very high levels. And then a lot of people started getting crazy, but it's like, yo, like this ain't stopping. You know what I mean? Like people don't want to spend 15, 20 billion on a new data center to be putting last generation of chips because they're cheaper. No, they want the latest stuff because I want to make sure that I'm competing with everybody that has the new stuff. So that's
Yeah.
where it's interesting. And you got all of that confirmation, all of that making sure like execution. The execution risk was taken out of the equation because you know that they can execute. They're growing their revenues, they're growing their earnings. So that's the beauty of it. That's the beauty of it. Like
Yeah.
I don't know. Like I think we got like, and like everybody's like afraid, but it's like earnings continue to grow, revenue continues to grow. They keep beating expectations, even though expectations are tamed. Like right now, Nvidia's coming into earnings at the end of May with the expectations in revenue and earnings restarted. Finally, we're not expecting 200, 300, 500%. We're expecting normal growth, hopefully. But probably the stock rallies from here until the earnings. Who knows? By the way, no financial advice. I like Nvidia. I like Nvidia and I own a ton of it. Disclaimer. You know what I mean? Disclaimer. All right. Let's have a look here. So Amazon, for example, is usually followed by big funds with their analysts, Bloomberg terminals, direct contact with the company. What have they not seen that we have? The thing is like I don't think they have that much of an edge anymore. You know what I mean? Like having access to a Bloomberg terminal before was like, okay, cool. But I have access to the person that reads the Bloomberg terminal through Twitter. You know what I mean? It's like now you probably get the news faster than many of the analysts. It's like there's this one trader from Dumb Money. The guys are great. The guys are fantastic. Like the way that they
Yeah.
invest is very different to us, but very, very useful. They say it's like, yo, the only benefit a Wall Street person has is that they have access to the credit card data they can purchase, which is really expensive, and they can buy it from the banks.
Uh-huh. I was reading a book from Peter Lynch, One Up on Wall Street. So that's a classic. So I feel a bit embarrassed that I just read it now. It's quite interesting because it was written, I don't know, in the 90s and mid 90s, I think. And Peter Lynch was basically saying, like to his readers, go and get the newspaper. On that page of the newspaper, usually you find some news on earnings, and it's usually news that are a couple days old, but that's okay. If you're not day trading, it's okay. You don't need to have instant news like Wall Street. Interestingly, and this is absolutely what you said, Nestor, now we have instantly the news Trump posts something on True Social, we have it. The CEO says something, we have it immediately. It's not like before where you had to go and buy the newspaper from from the day
Correct.
before.
Yeah.
It's we have the news instantly. So we do have hedge funds that try to get information in advance. So I work in the industry, and one interesting anecdote actually that I know about hedge funds is they are trying to have access to satellites, and those satellites, they're actually going to monitor the number of oil vessels that enter a harbor or leave a major harbor in the US.
Yeah.
And with the number of vessels that come in and out, they're able to estimate the supply, and they're able to estimate whether the oil price will go up or down in the future. So I don't think it's something you can do with Amazon. I don't think you can really monitor
But
the number of cargo
people do
ships
it.
coming in.
People do it with
You know,
Walmart though. The number of cars in Walmart
yeah,
parking lots. I heard
yeah.
of that too.
That's
So
another example.
there is ways and tools and
You
things, but
you can have an edge there, but it's not always reliable, and it doesn't tell the story in the long term.
yeah.
And with tech stocks, it's practically impossible.
All
With
right.
Walmart, there's like real cars you can count.
So here, the Magnificent Seven raised already a couple of percentages. Actually, Microsoft was up 25% from the lows, which was nuts. Nuts. Still right time to go in now or hope for another dip at the moment? Okay, look, this is not financial advice.
Depends.
I'm not going to tell you what to do. I have no idea. Right? But do I think the volatility is gone out of this market? No. Do you need to go 100% in and just buy all of your stock today? No. Just buy put a couple of buy orders at different levels, right? Like you don't have to go crazy. Because I know, for example, Timothy right now has like buy orders ready to go. He has a little bit of money on the side on the cash on the sidelines, and he's just waiting for the prices just to.
But
Oh, overnight, Trump says that he's gonna nuke some country, and oh my God, I just got Microsoft for $300.
but Timothy, you use technical analysis, right? Often.
I
What does the
combine
technical?
technical
Yeah.
analysis with the
Wh-
value
Yeah.
I calculate,
What does
and
the
then
TA
when
component say about the Mac 7? Like, that's the question.
well, let's say Microsoft, we can see that it tested its historically level on the weekly chart, which is the 200 moving average. That doesn't happen like in 5 years. That's one in a 5-year opportunity. So I place my orders near that moving average just in case the markets spikes down. What happened actually in April? Suddenly it spikes down
Snake
and bam.
Flash crash.
swipe.
And if the market doesn't go this far, that's okay. I will still buy when I feel like the market is fearful and bleeding, and I just market buy some stocks as well. But even with Bitcoin, you have to have some low bid ball orders ready in case you have those spikes down, because eventually these are the companies that will recover, and you have to ask yourself, are you here for like 1 week, 1 month, I don't know, 2 quarters? If you're here for the long run, I mean, buying here or 10% lower, it doesn't really matter. So you don't really have to focus too much on
Yeah.
buying at the exact level you want.
Yeah, but if you want to get rich quick, how do you do it?
You want
Serious question.
to learn the trick of how to make $1 million?
A lot of people want to.
If you want to do it quickly, start with 2 and then go back to 1. Because you lose the day trading, doing I know the market better, I can do this. But start with 2, and go to 1. It's the truth. I mean, like, it takes time. You're buying companies that are producing value, creating wealth, creating things. It takes time. I'm not saying that day traders can do it. And a percentage, if you want to day trade with a small percentage of your portfolio, do so. I'm not against it. If you can see the alpha and take advantage of it, do it. But not everybody can do it. Like, I pay attention to the markets every single day. I have a day trading account, and I'm mostly swing trading. I'm mostly taking advantage of the swings because they're more, right? Like, am I competing with ChatGPT connected to to Gemini and Meta, and they're all having a baby, and the new baby, like, no, right? Like DeepSeek, and like, no, like, they get the news. The ChatGPT reads the news before I can even read the first title. They're already trading. You can see the market move before I even get the data. So I'm not going to try to compete against that.
Yeah.
But do I have an edge? Yeah, when you see the overall markets and overall trends, sure. Look, we have here another question. But which I want to throw Akeem at. I want to throw this one for Akeem.
Tell me, I cannot see it, but yes.
Secondly, I
And
think
secondly-
Microsoft went higher than Amazon since the tariff dip. So go for Amazon. That's not how you look at stocks.
Hey, you told is my question.
I know. Yeah, well, get muted.
That's a really tough one. A really tough questions. I think the arguments for both. Microsoft, I think, will not be impacted by tariffs. Amazon might be impacted by tariffs, but Microsoft dropped less. Is actually even up on year to date. Amazon dropped more, so it seems to be already priced in. So what I'm seeing is risk reward quite similar now. Microsoft and Amazon quite similar.
No, is it true?
If both were trading at the same valuation, I would say go Microsoft. But now it seems to be priced in.
Yeah.
So.
What do you think about this one though? Should you get into small caps right now? There's major uncertainty in small caps, I think.
I had a tweet yesterday. I had a tweet yesterday saying that small cap stocks haven't been this undervalued since 1950. So that means, yes, it's a buy. Can it go even lower?
100%.
Perhaps.
But are you buying the Russell or are you buying individual companies?
No, individual companies. No, it's a bad index.
Did you just like contradict each other, or did you say the same?
Yeah, you have a lot of bad apples.
I'm buying the Russell.
You just said it. You literally just said it.
No, I'm buying a small cap ETF.
Okay. The thing is, it's tricky because it's like all small caps.
The RTY. Risks. That's the Russell.
The one I can buy in Belgium.
Just maybe one word on that. Mega cap, they have more cash, so they can reroute to supply chains to avoid the tariff issue. While small cap, they will in my opinion they will suffer more.
No, look, big caps have a ton of cash on the sidelines, ready to weather this storm, right? They whenever companies start going bust, who do you think is gonna come in and just swipe? They play a different game. They're gonna be buying small caps, because they can. You know what I mean? And they're gonna get them pennies on the dollar. So because they can, you know what I mean? So it's big companies like Amazon and Nvidia and all of these big companies. They build their reserves. They're ready for the downturns that are coming.
Look,
but the thing is again, small caps have a place in a portfolio too. Yeah. Don't get me wrong. This
Absolutely.
is very similar to high yield.
Let me give two examples very quick. Small cap stocks, I think they have potential, but you have to go individually. You have to pick them individually. I have at least two. Now that I'm thinking, I have at least two small cap stocks, really small, less than $2 billion. So one of them is IPX, IPERNX. This IPX is actually creating a supply chain of titanium. Titanium is used in the US defense. It's creating a supply chain in the US and is supported by the US government. So it will not suffer from tariffs. It will actually benefit from tariffs. So the small cap stocks you need to pick are the ones that will benefit from tariffs. If you have a small cap company that offers cloud services, for example, and is growing quickly, in my opinion, is a buy, if the valuation is good. So you have to be very picky, but you have really gems then in the Russell for sure.
I think right now with interest rates are where they at. Oh, sorry, Timothy.
Yeah, just to make that clear, okay, you can pick one or two stocks, but don't make it 50% of your portfolio. It's highly speculative.
It's high risk, high reward.
Yeah, but not more than 5% for your portfolio. I would say cap it to 2.5%. I don't know, Akeem. You're the professional.
You mean per stock or overall small cap exposure?
No, per small cap stock, I would say.
Yeah. No, it sounds right what you say.
Like you don't want to be in a position when one company can blow up your whole wealth. You know what I mean? A company that potentially,
Yeah.
because there is something in investing that everybody has to get good at, and it's understanding that you don't know what you don't know. You have to understand that you can analyze everything you want, you can read all of the books you want, and all of a sudden, Trump decides that today he's going to focus on tariffs. Everybody knew he was going to set tariffs. If you had asked last year, will Trump set up 145% tariffs on China? Nobody would have told you that. Nobody. You know,
Yeah.
you don't know what you don't know, and you have to understand that there's always a risk you don't see. So take it. So don't put all your eggs in one basket. And if the basket is flimsy, don't put most of your eggs in that basket.
But it's a great comment. I love the
It
comments
is.
tonight. We have a lot of
Today
really
they're
good
on
comments.
fire. The
They're on
community
fire.
is on fire today.
They're on fire.
You know? But yeah. All right, let's say Mimi says here. In some circumstances, buying not because of the stock is cheap, but because it's good potential. And I agree with it. You're buying a company here, right? Whenever you buy a stock, you're buying a company. But
You're
Jeff
buying a
Bezos
story.
said, exactly. Jeff Bezos said the company is not the stock and the stock is not the company, but you are buying the company. He says that because during the 2001 financial crisis, the stock price was coming down while he saw all of the fundamentals of the companies go up. Sometimes the market doesn't realize and it's just panic, panic, panic. Everything will not work. Nothing is going to matter. The world's going to end. And you see that and you see that. But sometimes the story is there. It's like the story might not pick up today, but it might pick up in a week, in a month, in a year, in 2 years, you know? And it's like you keep paying attention to the stocks you like and the stories you like. Because I think it's stories too. Like they say the CEOs are the best storytellers and salesmen. You know, they're salesmen. A CEO is a salesman.
Yeah.
Is the truth.
By the way, some of the viewers will be our guests in the next weeks, so it's nice.
I'm excited
to have their comments.
Yeah.
We decided that's like between brackets, but we decided to have a couple of popular investors, from time to time as guests, precisely to bring this interesting
discussion, conversation. We're looking to talk to people and like, yo, am I the best investor in the world? Probably not. I want to be. I wish I could be, but I'm probably not. You know what I mean? Am I making money? Sure. Do I enjoy making money? Yeah. You know what I mean? But I'm always looking to learn.
I mean, you have outperformed Warren Buffett in the last 5 years. Just saying.
I don't want to mess around with the go. I don't want to mess around with the go. You bow to your elders. You bow to your elders. I need to go. You know what I mean? Like I can't. I'm not even close. No. I need another 50 years worth of returns like this to even consider.
Yeah, that's a fantastic comment of Orbital. We believe that the market is inefficient. That's why we're stock pickers,
It is. And the thing is there are inefficiencies because
terrible ones.
We don't get to see everything. We don't get to see the management at play. We don't get to see how the story, the industry, everything plays out. So it's the truth. I agree 100%.
But there's a lot of psychology also, a lot of sentiment that completely misprices a lot of stocks. That's something also to bear in mind. And it's what you were saying in the beginning. Tesla, Apple, they have their fanboys, right? The stocks. Apple, I understand the valuation. It's still understandable. But Tesla is just not understandable. Like you need 1 century of earnings to compensate for Tesla. And so you have these mispricings and... the market is not super efficient. It's actually very inefficient.
Yeah. No, it's the truth. And like as an economist, I like to think that everybody is rational, but I've learned the opposite. You know what I mean? Everybody's rational towards their own storage, which might be irrational. So that's the truth,
Yeah, I mean, they teach you in those economics classes, the rational consumer, supply and demand, blah, blah.
Everybody's perfect.
But the reality is very different.
I want to see here. There is a link, but I don't know how to click. Like, I don't want to mess with it. I'm gonna stop the stream. I can't do it. I can't do it. I can't do it.
Do we still have one last point to discuss? One last topic?
No, I think we've touched on everything today. I mean, like the thing is like, look, tariffs are like, I don't think they're gonna be as bad as they're expected.
Let's take this question here. It's a fantastic one. Who read? I didn't have time to read the terms between the U.S. and Ukraine deal that was signed yesterday. I think it was Timothy. Did
they sign?
Yeah, they signed the deal. No,
No.
Ukraine, the US, they did sign a deal on collaboration for minerals, but I didn't read the terms. I mean, I didn't read
I mean,
exactly the
neither. Me
terms.
neither. Yesterday I had to step away. No. That's not good. I'm not professionalism. Oh, oh.
Akim is bugging.
Akim is.
But Nestor, maybe we should do another round of how bearish we are. Like,
Yeah, the bull and
give a
bear
number.
case. What are you at? What are you at right now? I'm a little bit higher. I'm bullish. I've been bullish for a bit now for the last like week and a half.
Yeah, the thing is the market fucks with your head, you know.
It
When
does.
the market goes down, you're uber bearish, and then you get this son of a hell rally, and then suddenly you think, whoa, it's back on, question mark. But I'm still cautious. I'm not sure if we ever gonna test those lows again. Probably another shakeout before we move
I think
higher,
so. I
because
think I think
I
the
don't
volatility is
think
here.
the market will go up in a straight line. It never does. But if I put a number on it, I would
What
say like
one
a
to 10?
5.
You're a 5. You went up too. Nice, nice. I'm at 6.5. I'm at 6.5.
I'm at
I'm
5.1.
I'm at six. Like I would be at a 7 plus minus 1. You know what I mean? Like it depends on the day. Depends on Trump.
Yeah.
Yeah, you're yeah, you're extremely volatile, Nestor, because I think I remember you were like an 8 and then a 3 and now back
Yeah,
to
yeah, yeah.
6.5.
Every day the data changes, and it's like I'm like I did the analysis on the tariffs, and I was like,
You're
okay,
data
this
driven.
makes more sense. Yeah, of course. I'm like the market bus
But
fed.
there's like one point I wanna make. Like, have you watched the VIX? It's been 3 times in its entire history that the VIX moved above a certain level, like I think it's 60 or 80. And each of those 3 times it marked the bottom. Every time it dropped below 30 again. And that's kind of what we had right now. So that's a sign that markets might be accepting that the worst is over, and we'll probably see some volatility, yes, but maybe not take out the lows we had.
Oh, bots
Yeah,
is an
it's
ETF.
all about the forward picture.
It is.
It's all
It
about the
is.
forward picture. Now the forward picture we have is there will be deals. It's a fact. There will be deals. There will be also rate cuts. In my opinion, is a fact. It's. I mean, this is anyway what the market is looking forward to, and this is what we can look forward to, and that's why the sentiment improves. The bad
Mimi's a
things start
9.
going in the rear mirror. Sorry.
No, go ahead, continue. I just ADD.
As the bullish grade.
Yeah,
Yeah,
Mimi's
yeah.
a 9.
No, it's yeah.
Where are you at? Where are you at?
Yeah, same.
Okay.
Yeah, same. I think last time I think I went up from 8 to 9. I think, and so I'm still at the 9.
Okay.
We're gonna have rate cuts. We're gonna have deals.
We are
Yeah,
like the thing is we
I
are
feel
getting
good.
like we've gone through all of the bad. As long as Trump doesn't say, okay, we're just gonna go to 50%, which is still in the table. You know what I mean? I just don't trust Trump. But I think he's realized that the market does not like the bonds. The bond vigilantes do not like tariffs. They're like, sir, you're gonna mess up, and I'm not gonna. You
Yeah,
you can do that with other people's money, not mine. When you see the bond market act
yeah.
like that,
But you know, I did like his post, the one that he posted this week on True Social, saying, "This is not my stock market. This is Biden's stock market." This shows that he has his eyes on the stock market.
he does. He
That
does.
he sees it as important, and
Yeah.
he wants it to rise to finally say or to say
I
again,
fixed
this is the
it.
Trump market.
Yeah. I have done this for you. The best market I've
Yeah.
ever lived in the history of the stock market. He 100%.
Oh
He
yeah.
will
As
be.
soon as we're gonna have an all-time high.
Yeah.
Guys, we haven't talked about crypto, so we have to touch on some crypto,
All right, Timothy.
some Bitcoin, some Ethereum. What we're seeing in the market, Bitcoin has reclaimed 95K. It's now trading at around 97.
Let me open up my coin market cap.
And yeah,
Yes,
what
close
a
to
turn. I
97.
mean, it touched 74K just a few weeks ago, and now it's at 95K. I mean, I was actually expecting that Bitcoin would follow the stock market more to the downside, but it actually decoupled
Yeah,
and outperformed
I think
stocks.
it's
The
been leading
Nasdaq,
the market.
it's been
Like,
leading,
you
and
know,
also funny enough, it's still its dominance is still increasing. You know, that means if Bitcoin dominance is increasing, that Bitcoin is outperforming most altcoins, and you're putting more risk actually by buying altcoins instead of Bitcoin, because those are more volatile when the market dumps, you know. And when the market goes up, Bitcoin is actually moving higher or at the same pace as most of the altcoins. And that's what we've seen Bitcoin do the entire time of this cycle, outperforming altcoins all
even
the way
big,
up.
even Bitcoin dominance is sitting at 63%. Eh? Ooh, it's
Yeah,
nice. It's
I
looking
bought more
super
Bitcoin
interesting.
today.
You bought
Call me
Bitcoin?
sui- Call me
I have
suicidal,
cash.
but I bought more. I made it my biggest position in the portfolio today.
And what?
The
Yeah,
thing is,
buy
Akim, I
high,
bought some
buy
too.
high, sell
I bought
low.
some too.
Warren Buffett told me this one time. Oh, it's the truth.
Yeah, Akim, I bought some
No,
Bitcoin
no.
too.
Yeah,
I'm away
yeah. No,
from
but
it.
really, buy high, sell higher, sell higher. Buy high, sell higher. You're not gonna get Bitcoin at $1 anymore.
I
That
don't
would be
think so.
nice.
That'd be nice. Michael Saylor will buy them all. I will buy them all.
I did
Yeah.
like the tip from Orbital last week. He was saying CRV, and CRV has been killing it, outperforming Bitcoin actually. And I've put it on my list of top altcoins because it's really a nice chart.
Crypto guru Mimi saying liquidity will shift to altcoins.
Yeah. And Orbital says dominance will
Orbital is
drop.
also saying
Yeah.
the same.
Yeah.
Dominance will drop
I
eventually,
think we'll
though.
see it. But it's just like I don't know.
Yeah, it's just the same like with small cap. When rates go down, you'll see more speculation going to the altcoins.
For
Or
sure.
when QE returns, we don't know when, but when the printer starts running, you'll see altcoins
Oh yeah,
outperform
it will
Bitcoin
boost
again.
everything. Yeah. Okay.
Yeah.
Good.
I
Good.
think that's it. Any more questions? Well,
I think
there's
we
more
touched base
questions.
on everything.
Wait. What's your guess prediction about rate cuts this year? This would be who said who was like super
Dimitris.
Dimitri's things we're gonna cut a lot. I think we're gonna like I'm always so hawkish. I'm always so hawkish. I'm like, why do you need to cut? Everything's fine. Yeah, I ain't like it's okay. Because I'm holding super strong companies. Yeah, I'm like sitting in Nvidia, sitting in Amazon. I'm like, it's okay. Yeah, I don't need to borrow money.
I think we will have a lot of rate cuts, more than are priced in. I think we have 25 basis points priced in, so 75 basis points in total. But I think we'll cut a lot more because things are starting to slow down. And when they start to slow down, in my opinion, they drop even faster. So inflation is slowing down. So we're in a disinflation. We're at 0% month over month. Let's see, the data we'll have in the next months. But I think it will drop very quickly, and the Fed will have to step in very quickly and cut rates, like not 25 bips at a time, but at least 50 bips at a time, basis points at a time. And this is
Right
like
question.
the scenario that I actually see. I think we will have like 5 cuts this year.
Wow,
5 times 25
But
you guys are
the most
crazy.
at
important
least,
question is, when are we
at the
gonna
very
see
least.
QE? When are we going to see QE?
So they will,
Something has to
in my opinion, they
break.
will stop QT already this month. They will stop.
They will stop.
Okay,
Man,
but that's
Trump's
not the
listening.
same
Trump's
as
listening. Trump's
Yes.
listening. Trump's listening. He doesn't want him to say it. You don't want to say it. Don't say it. The FBI's in the
You were
call.
cut out, Akim. We didn't hear you. Bad Wi-Fi.
I think. Look, I'm gonna give you my prediction on rate cuts while Akeem tries to figure out his internet.
Not on
I'm
QE?
I'm data dependent, and quantitative easing something has to break. I think something has to break, or something has to happen in the bond market, but I just don't see it. I don't see it yet. You know what I mean? Like there's no reason to do so. We are in a very good position right now. There's no
The
reason
reason
to do
is
so.
to pump the market, and
But that's the
Jerome
thing,
Powell
though.
doesn't want
But he doesn't
to
want to.
pump
You know
the
what I mean?
market.
Like he doesn't want to because right now he has a loaded gun, and if the zombies come, he can unload. But he doesn't have to unload because right now there's no zombies. There's no
Mhm.
scary things. There's no black swans. So far, I could be wrong. I could be wrong. 100% I could be wrong. But there's nothing, and I don't think he wants to pull the trigger unless something wrong happens. Why drop rates if nothing is breaking? Play it data by data. Do what you're doing. He gets the Nobel. He gets the Nobel. They're gonna give him a peace Nobel, and they're gonna give him an economics Nobel. 100%. Keep doing what you're doing. He's doing great. Mimi says. By the way, Akim, you cut halfway through, so we have no idea what he said.
Yeah, it's okay. I'm sure you covered it.
Okay, good. So Mimi doesn't think we get to 70%. That makes sense. I agree.
What? For the Bitcoin?
Dominance.
Yeah.
Sorry.
Bitcoin dominance. Bitcoin dominance.
Dominance. Yeah.
But yeah,
Mega
I think
Dove
we've
Akim.
touched on all points. By the way, if you have any questions, don't
Could
forget
be
to
my
leave
new
them.
name.
Don't forget to leave.
Mega Dove. I love that actually.
Mega Dove. I fly me to the moon. But yes, thanks everybody so much for watching. We really appreciate all the questions and the engagement. I think
Like
this
and
been our.
subscribe.
Don't forget to
That
hit
was
that like and subscribe.
fantastic.
If you want to have a look at our portfolios, they're in the link below. We give our stock bids for free because you can watch them and we cannot stop you. But yeah, make sure if you have any questions or additional things, put them in the comments. I'll make sure that these two guys reply, and I can give you my 2 cents on it, free of charge. What else?
Yeah. And
Yeah.
let's see the reports tonight. Let's
see the
see.
reports tonight.
Let's see if you were right to short Apple.
I think the guidance is going to be so important. It's going to be so important. You know, because it's like these are the guidance. It's like I think GM at the start of the week, and this is the deep end, by the way. So, like at the start of the week, I think GM had like earnings and they were awful, and the market just panicked. They were like, "Oh my god, this sector is actually getting affected by tariffs. Oh my god, this is nuts." And then the real like companies started coming up and it's like, "Oh, not every company has to actually deal with the tariffs." Okay, that's great. And then now I want to see the companies that actually have to deal with these tariffs, how they plan to see this market, because what they tell you is key. The fact is that not many companies have been like, the tariffs are going to destroy us. They're like, look, it's uncertain. But maybe they're talking to the administration and they're like, look, like, calm down. Don't freak out yet. Like, we're talking, so it's okay. That tells you something. It tells you something, psychology, you want to go in the deep end here. Emmanuel, by the way, get better. Keep on paying attention. It takes time. This is a business that takes you maybe one time, like maybe today you learn something in the stock market and 5 years from now you can make $1 million from it. So just keep paying attention to the markets. He's the guy that said, hello, I'm here to learn. He's from Ghana. I love Ghana. Their football team is amazing. I always support them because my team never goes. Venezuela has never qualified to the World Cup. I hope they do. I don't think they will, but go Ghana, dude.
And thank you, Jimmy, also for the nice words.
Thank you, Jimmy. Thank you, Orbital. Thank you, Chow. Yeah. You guys been amazing. Thank you, Mimi.
Okay.
Mimi.
Feel better soon. We need you in the stream.
Yeah.
Bam. Thanks so much, everybody, for watching another episode of
Market
Market
buzz,
buzz, baby. All right. That's so sick, dude. That's so
All
sick.
right.
All right. I press the stop button and I bet you don't want to stop streaming.
Bye
Get ready for
bye.
this. Get ready for this. It won't stop.
You